So today we're going to talk about non-recourse financing and basically what that is and who it's for. And just to give you a teaser, this is really for anyone. If you have the down payment and the reserves, you can get this financing, whether it's in your IRA or an LLC, or whether you're a foreign national or you have too many loans already. I mean, this is just really opens up the doors for so many people. Maybe you had a short sale or foreclosure or bankruptcy. It doesn't matter. You can still get the financing. So with that, I'm just really excited to bring on one of my colleagues that I just got to actually bring to Australia with us and share this message with our Australian members out there who are just thrilled beyond measure because they have not been able to get financing, or the financing they've been getting wasn't anything as good as this. And so they were just very excited. Now, here's the disclaimer that our attorney says we must tell you. So here it is. Please know that all the strategies presented here may not be for you or for anyone, and certainly the use of leverage must be taken very seriously because you owe the debt, so you need to make sure you can pay that back and that the collateral you're getting is good and worth more than the loan you're getting. So you always need to get your appraisals and inspections to make sure that's true. Always consult your accountant because any real estate transaction is going to have tax consequences. So don't jump in and do anything until you understand those tax consequences. You need to know. So the bottom line is do your own due diligence. What we're telling you is based on our due diligence, and we share that with you. But at the end of the day, you still got to do yours. It doesn't take you off the hook. All right. So on to non-recourse financing and the terms. Very, very excited to bring you Preston, that's not him. I don't know what that picture is. That's kind of funny. Anyway.
I am not wearing a silk suit.
You promise? We've had some people do it.
I hope it's okay that I'm in a t-shirt and jeans today.
That's what we prefer. I prefer like a baseball hat too, and an old truck, because that's usually. That means that you're out there in the field really doing the work.
Well, I'll just kind of jump right in. We're talking about non-recourse financing in detail today, and that's because, number one, it's the only type of financing that a truly self-directed real estate investor can utilize to leverage dollars out of their retirement account for the purchase of real estate. But what it also gives us is a great avenue for other investment dollars outside of retirement that maybe you can't qualify for conventional terms, as Kathy spoke of, or maybe you have a bankruptcy or a short sale on your credit profile, and that's preventing you from qualifying for conventional. Or maybe you have you already have 6 conventional mortgages and your debt to income ratios is going to be too high to qualify for another conventional loan. This product is tremendous for all of those people. Just to kind of give you a broad overview of what's available out there besides conventional financing are alternatives like your hard money lenders, which I'm sure a lot of people are familiar with, which might be okay in a crunch, and but typically you're paying 2 to 4 points up front, and you're paying anywhere from 12 to upwards of even I've seen 18% here as of late. So hard money, while it can help you if you're in a bind, it's not going to be the solution that that's going to help you ultimately make the returns that you want to make. So that's kind of why we set out to make sure that we had non-recourse on all of our assets, because we wanted our clients to be able to take advantage of a great leverage position with beneficial rate and terms that will help them cash flow instead of paying those hard money rates. Or if you're looking to self-direct and purchase real estate inside your retirement portfolio, there's actually 2 nationwide non-recourse lenders that that everyone just kind of knows about. They're relatively small banks, but North American Savings Bank and First Western Federal, they are North American Savings Bank is doing approximately 40 million in non-recourse loans per year. So as you can imagine, that's not a lot of money being lent.
Yeah, especially when you're the only game in town. That's
Right, exactly.
yeah.
So the problem, yeah.
And they're
So
not the best game either.
no, for sure, for sure.
Yeah.
I mean, what we've seen as of late, honestly, just in the last 5 years, I can probably count on my fingers and toes how many clients I've ran across that have actually qualified for financing through North American Savings Bank or First Western Federal.
Yeah. I kind of feel bad I just said that because who knows, they may be on here listening, and we are grateful for any financing that we have. But that has been the case if there really is that limited amount of funds.
Yep.
We've seen that it's been very difficult for people, but we've also seen loans go through. So if you are on the webinar, we appreciate you and are grateful. There, okay.
Absolutely, absolutely. But anyway, just to kind of brief everyone, on the rates and terms I've been seeing from those lending institutions, they're typically anywhere from 5.5 right now, upwards of about 7 to 7.5, depending on the qualifying asset. And their typical LTV on average is 50%. So, it's better than hard money, but in terms of non-recourse financing, we actually have the best rates and terms in the country. We don't charge any points up front, and all of our properties are between 5 and 6% in interest on a 30-year amortized note. And no prepayment penalties or anything like that. And you're looking at, your loan to values anywhere from 50 to 60%. So, great. I couldn't be more excited to be able to offer, clients the ability to leverage at those kinds of rate and terms right now, and how important it is to be able to take advantage of those rates while we can. I'm sure many of you, on the webinar today can kind of think back to when interest rates were much higher than we've seen in the last, 5 to 7 years. But when you start putting it into, start analyzing your cash flow returns based on your leverage, a 1% difference in your interest rate can have a large impact on the cash flow that you're able to generate with those assets. So it's it's really beneficial to be able to identify the right opportunity and move on it while you can still get these types of interest rates, because they will begin to fluctuate. Kathy, we've already started to see conventional rates start to creep up a bit. Not anything crazy yet, but
you know what? It could. I just read an article today that in a past cycle, real estate. Hey, listen, these real estate cycles are nothing new. They happen every decade. So I believe this article said in the 70s, interest rates went up 3% in a very short period of time. So please do not think that the situation we have right now will last much longer, because it won't. Your chance to get and lock in these low rates and these low home prices is really coming to an end soon. So get off the fence. This is the time. Really,
well, I mean, what it really does for them, Kathy, is it gives them the ability to pay off, to buy, multiple assets in most cases, and to pay them off much earlier, because their cash flow return is higher due to the interest rates that they're able to take advantage of. So, it's very important to be able to take advantage of these today, so that 5-10 years down the road, you've got all these assets paid off and generating that positive cash flow return without a mortgage payment on the asset. So, yeah, I mean, just some other things to note. We talked about the interest rates will change. Purchasing power in turn goes down. Well, what naturally happens in the marketplace when purchasing power goes down? It eliminates some people from being able to qualify for purchases, right? Because they can't afford it. So it actually it typically supplies more renters to that marketplace. So if you're a property owner, if you're an investor, you're in a great position at that point in time, because you're able to raise rents because demand is increased. So, you know, it's putting yourself in that position today so that it really benefits you tomorrow. The investor's ability to cash flow on the property and the effects of those interest rate fluctuations, we talked about that, and I can always, you know, do illustrations one-on-one to show you really what the difference between, you know, 1-2% in interest rate will do to your cash flow on an asset. And you know, we've already seen a little bit of that. You know, our non-recourse rates are starting to creep up a little bit, just like conventional rates. And you know what our clients could take advantage of just a year ago, you know, was a little bit better price per square foot and was a little bit lower interest rate. So, you know, just seeing those differences over a 12-month period, just it tells you that, you know, you really need to take advantage before that time has passed us by.